we have the current stock market update for Apple Incorporated, stock ticker AAPL. Before we begin with today's chart analysis, if you find these educational materials to be helpful in your trading, please remember to click the like and subscribe buttons and leave your thoughts below in the comments section so that other traders can find this information more easily on the platform. So as we can see here, we have the 4-hour price chart. It's a bit of an intermediate term time frame, and each candle on this time frame represents a 4-hour trading period. So as we can see here, we're starting to get some choppy price action that is starting to develop here at somewhat elevated levels. So overall, these bullish price movements have been positive, but we're starting to see some erratic price action as we move back toward these highs. So as things currently stand, this most recent price high came in at 237.21. This would be the price high that developed during the middle of July 15. And then as we can see here, share prices have attempted to sort of retest those areas on two different occasions. But we did see a bit of a significant price failure here coming in at 232.91. So there was some fair amount of downside price movement at this point, but we were able to establish support zones at one of the levels that we were watching for this stock, which really came in just right around the 215 level, right around there. So as we can see here, this area would mark the 50% Fibonacci retracement of the price move from 196 to 232.91. So if we sort of split that move in half here, the 50% retracement of that move came in just below 215. It was roughly 214.50. And as we can see here, we were about 50 or 60 cents away from that price bottom. So overall, this is the main level of historical support to watch here. But I do feel that the stock is likely to start forming higher lows here due to the fact that this rising 200 period exponential moving average continues to support the stock at higher and higher levels. So, as we can see here, we did just move through that 50% retracement area. And we're sort of overcoming that area at the moment. So as things currently stand here, I would expect to see some sort of a higher low that's posted. Now, will that exactly occur where we're seeing share prices at the moment? It's going to depend a lot on the Monday open. If we do see share prices move below, I would say roughly, let's get a rough number here, 223.30 roughly. If we see share prices move below there, we could see a further extension of downside losses here because as we can see, this is an area of historical support, but it's also that 100 period exponential moving average as well. So we're sort of seeing two different signals developing in the same area at the same time. So that is significant. But at the moment, we're still trading within inside of the exponential moving average cluster. So overall, we're expecting a little bit of sideways, possibly sideways to downward price action here. But that would be more likely to be confirmed to the downside if we do see a break below this 100 period exponential moving average. So we're seeing a bit of weakness and a bit of a sideways tone here. But this would start to accelerate if we do see share prices break below that 100 period EMA, which is that purple line here on the price chart. So, we're a little bit in neutral territory at the moment, but that main area that I would be watching right now does come in at 223.30. I could possibly even write that in here just because this is a major support zone. So a bit of a downside to sideways sort of buys here at the moment, but this would accelerate if we did see a break below 223.30. Overall, you wouldn't really start to turn to a bearish sort of stance here unless we did see a break below roughly 215 at the moment. As things currently stand, this is right around where that 200 period EMA currently rests, but it is continuing to rise. So, we could easily see that move into, roughly 218.10 or so here relatively soon, and then that could ultimately be the next bottom that we see for the stock if we do continue to see share prices move lower. Of course, this is Apple, so a lot of this is going to depend on how the broader market is trading. There was some economic data last week. We did see the non-farm payrolls number that was released. So, we could see a bit of a supportive tone to the market, I suppose. But a lot of that is going to depend on, how economic data affects the interest rate outlook. The interest rates are still at elevated levels currently. Positive economic data is not necessarily positive for stocks. So I think a lot of people misunderstand that on this platform. They seem to think that if there is strong economic data, that it just automatically means that stocks move higher. But that's not necessarily the case, because the real issue right now, especially with something like Apple, is the interest rate outlook. Is the Federal Reserve going to be tightening its position on interest rates? And that if that is the case, we would actually expect share prices to move lower. So that would be a situation where positive economic data would not be positive for stocks. So, you've got sort of a double-edged sword there. And I think that that's often misreported on this platform. Positive economic data just doesn't necessarily mean that stock shares move higher. So as things currently stand, the main level that I would be watching to the downside does come in right around 223.30. If we did see a break below there, I would expect to see a bit more of a retracement, possibly into 218 or so. But we do have this rising 200 period exponential moving average that should continue to be supportive overall. To the top side, what we're currently looking at is a share price resistance level that's about $10 above that major support zone. So as you can see here, we are sort of getting a bit of a trading range that is starting to develop at the moment. We can even draw that out here. So, we're sort of bouncing around in this trading range. And, the ultimate break here is going to depend on where the momentum trajectory rests from here. So just to close out the video, we will look at the indicator reading, the momentum indicator reading, and we can see here that it's been a bit choppy here. We have seen what could be considered to be a couple of false breakouts to the downside, but overall, we are still seeing higher lows in the relative strength index for this time frame. So that does suggest that overall, share prices should continue to be supported by this positive momentum trend. There are starting to be some signs of potential headwinds here, though, however, because the shorter term reading is negative. As we run into those resistance levels at 233 and 237, this is a formation here that could start to become more prominent and prevent share prices from heading higher. So currently, we're sort of dealing with a bit of a sideways trading range. And overall, the main weakness here, the risk for weakness, would be seen if we do encounter a break below 223.30. So this is the current stock market update for Apple Incorporated, stock ticker AAPL. Our high value trading strategies membership is currently available for a limited time for only $9.99 per month. These high conviction investment strategies are characterized by superior risk to reward metrics that target massive market beating returns over time. Join now to outperform the market. Lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership and start trading stocks with the pros.